It's a breather for borrowers as both the Supreme Court and the Finance Minister have offered a temporary relief in the moratorium case. The Supreme Court, in an interim ruling, has said that loan accounts that are not declared as NPAs as on August 31st shall not be declared as bad loans till further orders. After the 6-month moratorium during which all stressed loans got immunity from NPA classification, banks were supposed to get back to regular cycle beginning September 1st. However, the Supreme Court's interim order is restraining banks from doing the regular business. The NPA clock will now not start ticking from September 1st. So what does the stopping of the NPA clock mean for banks and borrowers? Firstly, this will help potential defaulters to escape the NPA tag till a final order comes. So borrowers who are on the verge of 90 days NPA cycle and are potential defaulters may get some respite for a while. Experts say with Supreme Court restricting banks from tagging accounts that are standard as on August 31st as NPAs, banks won't be able to count the 90-day cycle from September 1st. This, in other words, would mean that actual NPAs in the banking system will not reflect until the Supreme Court lifts the order and lets banks resume the process, pointing that this could in fact have an impact on the credit discipline. At a review meeting to assess banks' preparedness to implement a loan resolution framework in the aftermath of COVID-19, Finance Minister Nirmala Sitharaman urged the lenders to support both corporate and individual borrowers who may be under stress, asking them to roll out resolution schemes by September 15th of 2020. She added that COVID-19 related distress must not impact the lenders' assessment of their creditworthiness. During her virtual interaction with the heads of banks and NBFCs, Finance Minister Nirmala Sitharaman focused on two main points. Lenders immediately must put in place board-approved policy for resolution, identifying eligible borrowers and reaching out to them. Secondly, quick implementation of a sustained resolution plan by lenders is important for revival of every viable business. The intervention by the Supreme Court and the Finance Minister would assure the companies, many of which had to stop production, shut their businesses, and individuals, many of whom suffered job losses and had their pay cut, that their accounts will not immediately be classified as bad loans after August 31st lapse of the 6-month moratorium. More importantly, analysts pointed out that they can borrow more now. The Indian banking system has over 8 lakh crore rupees worth of NPAs at this stage, which is expected to spike to double digits by March next year due to the COVID-19 pandemic. Typically, banks prefer not to declare NPAs because they have to set aside substantial money to cover the risk involved in such loans. However, as past experiences have shown, hiding the NPAs from scrutiny creates a bigger mess in the economy, leading to an asset quality problem. In that sense, the Supreme Court order restraining banks from declaring fresh NPAs is not good for the banking system.